Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of Poly Medicure Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Rohan John from ICICI Securities. Thank you and over to you, sir.
Thank you, Jacob. On behalf of ICICI Securities, I welcome you all to the fourth quarter and full year FY23 earnings conference call of Poly Medicure Limited. Today, we have the senior management of the company with us, represented by Mr. Himanshu Baid, Managing Director, Mr. Naresh Vijayvargiya, CFO, and Mr. Avinash Chandra, Company Secretary. I thank the management for giving ICICI Securities the opportunity to host this call. With this, I hand over the call to the management for opening remarks. Over to you, sir.
Thanks, Rohan. First of all, I'll apologize to everyone that I was a little late due to some medical emergency. Now everything is fine. I really appreciate your time today. I'll take you through the first for Q4 earnings. So in Q4, the revenue of the company was 306 crore, and the standalone revenue was 292 crores, and the consolidated revenue was 306 crores. And if you look at the quarter performance, March quarter versus last year's March quarter, the revenue has increased sharply by around 56 crores. And also the margins have improved, as I had informed in the last call, that as the raw material prices have started cooling, we will see a margin improvement, and I think that has already started to show in the results. Also, EBITDA margins are improving now, and if you see in quarter 4 of March, our EBITDA have gone over 25%, it's now close to around 27%. Again, there's an improvement from December quarter of around 250 pips plus, and from last year's March quarter, there's a significant improvement. Also, the PAT has increased sharply as we compare from March 22 to March 23, from 36 crores to 58.81 crores. And there's also margin improvement in terms of PAT margin from 14% to 19%, which was in March 22 versus March 23. If you compare with December quarter, there's an improvement of around 1.5%. So if you look at the revenue, the export revenue was around 68%, and domestic revenue was around 32%. And domestic sale last year grew by around 15%, and export revenue has grown by around 23-24%. So overall, the guidance which was given for FY23 was for around 20% plus growth. So I think we have done an overall growth of around 20+%, close to around 21%. And we maintain a similar guidance for FY24 for a 20% plus growth in the full financial year. There are a few important highlights. The first important one is the company crossed the revenue of 1,000 crores. So this was a big milestone for the company that in its 25th year of operation, we have closed a milestone of 1,000 crores. And second very important news I want to share with all people on the call, that company has now received the 2 FDA approvals which were pending. Approvals have just come in last few weeks, and now hopefully in quarter 2 we should be able to start selling products in the US market. That's our expectation right now. So this is a big milestone for the company of getting the US FDA approvals and starting something in the US. So this will now accelerate our growth in the US market, which is a very important milestone for the company. Also, we are seeing some important things, which were the 3-4 new plants which we had mentioned in the last call. So first plant has gone live already this month, and the other 3 plants will go live between quarter 2 and quarter 3. So that will add up extra manufacturing capacity in the company. So we hope that whatever capacity we have now as of today, the capacity will almost double. Let's say, and when we go live fully with all these plants and this plant go fully operational, in 3 years we should have almost double the capacity of what we have today. And this is again important for us to scale up manufacturing for India market, for European market, and for the US market. 3 important geographies which are very important for the company going forward for next 3 years. The next big update is on the new medical device policy, which was recently announced by the Government of India. So this was a long awaited decision which had to be taken by Government of India, and the important highlights of this policy are: there's a new export promotion council being formed for medical device export promotion, which is a very important milestone for the industry. And the second important thing is that the regulation will now fall under single window, because earlier the regulations were done at multiple places, where it was at state level, at zonal level, and as well as at the central level. Now there will be a single window clearances for all new applications, and this is a big ease of doing business for the medtech industry. For Polymed, it's very significant because we were one of the architects of this policy. We have suggested a lot of things to the government to implement, and most of these things have been implemented. Also, there will be a policy for incentivizing R&D in medtech space. So that is also another card. Though the fine print of this policy is still not available, it will be formally launched by the Honorable Minister, Mr. Mandavia, on 26th May. But the initial contours are very clear that it is going to support manufacturing in the country. It will also support reduction of imports, which currently stands around 70% in the medical device industry. So overall, whatever decisions are taken by the government through this policy should benefit the company in long run to accelerate manufacturing. Also, there is a push towards Make in India, where through a preferential purchase plan, companies which are manufacturing in India, and if they have more than 50% local content, they will be treated as a class 1 supplier, and they will be given preference in government purchasing programs. So all in all, it's positive for the company and positive for the industry. Another area I would like to touch is the dialysis business. So last year, as a whole, the dialysis business has grown by around 40%, but it was linked to PLI. Though we did not qualify for any PLI incentives, but nevertheless, and there were some headwinds because of cheap Chinese imports coming in, regulatory framework not being there for these kind of products. Only from 1st October 23, the regulations have started for most of these dialysis products. So maybe during the year we will see some support from the government in terms of bringing some quality control orders to restrict Chinese imports, and also we see certain policy interventions with national dialysis policy coming in, which government is going to start soon. And there is also a one nation, one dialysis policy on the cards, which the industry recommend to the government that we should have similar outcomes. So we want to prohibit reuse of these kind of products, because currently there's a reuse between 6 to 8 times, and that is our major cause of infection in patients. So we are also proposing the government to stop reuse of these kind of products so that patients can have a better life, because currently in India the life of patients under dialysis is between 2 to 3 years, whereas in the Western world and developed countries it's between 8 to 10 years. So I think if we can control the reuse through this new dialysis policy, that will help us to maybe sell more products. So that is what we are recommending to the government. And our machine installation base continues to increase, and this year we plan to install close to 200 machines. That's the plan, and most of those machines will be indigenously manufactured. We have already had very good reports of our indigenously manufactured machine. 4 machines are currently under operation with various hospitals. We have got, we've done close to 500 cycles already, and we have an excellent report. We have been able to match the machines with the top machines which are being currently sold in the market from top manufacturers. So this is also very good news I wanted to share with all our shareholders. So Currently, the business this year, our focus will be to go and develop strongly the U.S. market after receiving the FDA approvals. A strong growth is forecasted for India because our penetration in corporate hospital continues to increase. So we will focus more deeply in the chain hospitals. We expect that we should increase, especially in the corporate chain hospitals, at least by 30 to 40% this year. We also will focus more on Europe because we see also some traction coming from Europe. Last year, the European revenues grew by around 25% in the export basket. So I think we are continuing to see that same momentum this year also on the export front. On the domestic front, renal business probably should go between 30 to 40% also this year, though the base is small, but we hope that again we will have the same momentum of 30 to 40% in spite of all the headwinds we have seen. And rest of the business should grow close to between 15 to 18%. So that's the plan for the whole year. With new plants coming into operation, we will have enough capacity and capability to handle new businesses which we are currently targeting. We have also launched a new division, which is a critical care division. So currently our products are mostly sold in operation theaters, in surgical rooms, and wards. But now through critical care division, we will target ICUs, intensive care units, where we see more high-end products being used. And a lot of new products which we have developed today can be used in ICUs, and that is what we are targeting now. And that will also help to upscale the business and compete with large multinationals which are operating in the segment. So these are some of the highlights I wanted to share. And if there are any questions, I'm happy to take them. Thank you again, for patiently listening to me, and again apologize for being late. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jaiveer Shekhawat from Ambit Capital. Please go ahead, sir.
Sure. Thanks a lot. And good evening, Mr. Baid. Firstly, sir, on your PLI scheme, you mentioned that you could not qualify under the PLI scheme this year. So could you just specify the amount of revenues that you have done under both the schemes separately for this year, and the amount of investments that you've already done in terms of capex, and also what would be your aspirations over the next 4 years till the tenure of the scheme? That's my question number 1.
Yeah. So can I answer that first? Yeah.
Yes. Please go ahead.
So for the PLI scheme, the first scheme, our renal revenues stood close to 75 crores. So we were short of target by around 30 crores this year, around 25 to 30 crores. I don't exactly remember the number, but that was what we have envisaged. And for the second scheme, which is for diagnostic products, we have already qualified for that scheme, and we will receive incentive during the year. Regarding the investment, under both the schemes, the investment is close to around 45 crores.
Okay, that's the amount of investment that you've done currently. Yeah. But I believe the minimum investment should be around 100 crores, if I'm not mistaken.
Yeah, that is correct, absolutely correct. So we will continue to invest because as we increase our capacities and in both so this is the only, last year was the first year for the scheme. And so we continue to invest, and there are thresholds we have to meet. Anyways, last year, our capex was above 200 crores. And this year also we're doing a capex of between 175 to 200 crores. So already a large capex is planned. And out of that capex, some capex will be allocated for PLI scheme also, which will be close to 15 to 20 crores.
Understood, sir. Anything you can highlight on your aspirations over the next 4 years?
The aspirations are very clear that we want to reach the target, of 300 crores, which was laid out in the PLI scheme for renal business. But again, if the business is not profitable and, we still see headwinds, then we will definitely, scale it down a little bit. But so far, let's see how government, reacts to the new medical device policy. So we have a lot of, expectations on this policy.
Understood, sir. And just a follow-up, would you also be looking to export these renal care products, given these can also be met?
Correct, absolutely correct. So we are already now, we have met most of the regulatory challenges which were there, and we are in process of registering our products in some of the markets. And hopefully within this year itself, we will start exporting some of the products.
Understood. And sir, moving on, you also highlighted that the Europe region has done very well for you.
Yeah.
So is there a pent-up element to it, given that there was a pile-up of preventable surgical procedures during COVID?
No, I think that's not the case because, I think in Europe, I think one important thing which we can see is high energy costs, and a lot of manufacturing is kind of stalled in Europe right now. And because of that, we are seeing that many customers are leaning to India. And also China Plus One is also one of the factors where many companies now want to diversify their vendor base. And also we are able to win more customers also in Europe. So I think that's also a very important thing.
So by customers, do you mean, are you adding more distributors there?
Yeah, of course, distributors, and again, distributors are selling to hospitals. So we also engage our distributors who we train them so that they can go to hospitals and present our products there.
Understood. And sir, on your capex, you mentioned that probably this year also it might be a capex intensive about 150-175 crores.
Yeah, correct.
And in FY23 you have already done about 240 odd crores of capex.
Yeah.
So what would this 150-170 crores of capex this year would be for?
The 4 new plants we are setting up, so the infrastructure is ready. Now it's mainly on machinery side and adding up capacity. We are adding into critical care products. So we're bringing into some new technologies. So all that will be part of the whole capex, and that also includes maintenance capex and other operational capex also.
Understood. And sir, lastly, on the margins outlook as well, given that most of the benefit of RM moderation has already played out this quarter, I mean, do you expect further room? And also you mentioned that renal care business may not be as profitable. So could you just help us in terms of the margin differential?
Anyway, it's factored in. The renal, whatever is there, still factored in the current P&L. So there's nothing extra, which is going to happen. So when we see the yearly this year, whole year as a margin. So in fact, if you remember in the Q3 call, I had mentioned that once the prices soften, then definitely we see a margin improvement. So we are now back to, let's say, 25+% margin. And I think that margin should continue until there is something more happening globally.
Understood. Thanks a lot for answering my questions. All the best.
Yeah.
Thank you.
Thank you.
A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Rashmi Sancheti from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity.
Yeah.
Can you just clarify the sales breakup? You said 68% exports and 32% domestic. This is for the quarter. And is the 68% of the standalone sales or consolidated sales?
No, so 68% is for annualized. So 68% of the business comes from the infusion and vascular access business.
That is your export business which you mentioned.
Yeah, this is for the whole year, ma'am.
Okay, and that 68%, if I just want to put the breakup, it is 68% of your standalone annual sales. That is
1068 crores. Yes.
1068 crores. Understood, sir. And out of this export, infusion therapy was what contribution?
So infusion therapy has a maximum composition around 80 to 85%.
And in domestic infusion therapy contribution was how much?
Around close to 45 to 50%.
45 to 50%. And related to the renal segment, I just didn't understand one thing. You mentioned that we are planning to install 200 machines, or we are going to ramp up to 200 machines by this year?
So last year we have installed around 140 machines, and this year we target close to 200 plus machines to be installed.
Okay, and we are aiming 500 machines in, say, next 2-3 years.
Yeah, that's correct. That's how we want to ramp it up.
Okay, but one remark which you mentioned that 4 machines are under operation. So what does that mean?
These were fully indigenously developed machines. Last year we had installed them, and earlier we were using CKD. Now we are doing fully locally made machine, and that time the import content was around 70%. Now the import content is reduced to less than 50%.
Okay, so whatever technology and everything which is used to manufacture this particular machine is all basically outsourced locally.
No, it's all not outsourced locally. It is all made in-house. So components and parts are outsourced. Let's say the PCBs, the LCD screens, these are outsourced.
Understood.
So earlier we were getting it from suppliers in Taiwan and Korea, but now we are able to find PCB suppliers in Bangalore and also some other components which were available outside India are available in India.
And whatever machines which we had installed, is it like, it's installed pan-India or currently, we have more...
It's pan-India, ma'am. It's pan-India. It's pan-India.
Pan-India. And
so, team pan-India.
Okay. And so can you just talk a bit on the pricing, where we are pricing these products and what is the kind of operating leverage, whether it is, more than the company level currently or it is currently, lower than the company level?
See, currently as this business is just a few years old business, it's just 3 or 4 years old business for us. And as I mentioned last time also and this time also, so we have certain headwinds for this business because of cheap Chinese imports coming in. But we are waiting for the new medical device policy, what the government is going to do, and they're pretty concerned about what is happening today in the import front. So if there are certain policy initiatives like bringing a quality control order for imported products and benchmarking their quality with BIS standards and all that, so that should be a game changer. So we are just waiting for that. So I don't have a definitive answer for this.
Okay. And so when you say that, you're planning to register products from the renal segment for the export market, which are the markets are you targeting?
I can't disclose this, please. This is confidential.
Understood. And so the products which you are targeting, that includes machines also, or it is more of a dialyzer and renal
consumables? It will be more of consumables for dialyzers and other products. Machines will be later on because machines also need a service setup. Because not only we have to install a machine, we also put service people on the job. And because the machines can't be under a breakdown for any reason. So we don't have a team outside India right now, so we don't want to do that. So we'll focus on because India itself is a 4,000 machine market.
Understood. And so the team which
there is enough headroom in India to grow this business in long run.
Okay. And so the team, how many people, just for the service we have hired for this machine?
Including technicians and service team, we have close to around 25 to 30 people.
25 to 30.
Yeah.
And my last question is on gross margins. You said that because of the softening of input cost, this quarter we have done almost 66% gross margin, the exit run rate. So this 66% is something that we should think that, it is sustainable for the full year in FY24, or you believe that, probably whatever 63-64% which we have done for the full year, that is something the right number to model in for the next year.
Started the year, again there was a pressure on raw material pricing. When we started also there were supply chain constraints with huge, delay in materials coming in, and the freight costs had also increased considerably. So now everything has softened. So if this trend continues, then we should probably be in that 65-66% range. The current trend we see in the raw materials from January, February. But if that trend changes, we don't know because it again depends on the global supply chain, oil pricing, everything. But so far, the trend says it should be in that range.
So in the optimistic scenario, we are able to sustain the quarter four growth.
Absolutely. I mean to say, this is a realistic scenario, not even optimistic means it will further change. But this is a realistic scenario right now.
Okay. Thank you, sir. That's it from my side.
Thank you so much.
Thank you. The next question is from the line of Nitin Gosa from Bank of India Mutual Fund. Please go ahead.
Yeah, hi. 2 questions. How big is the corporate chain hospital for us in India?
Currently, corporate chain business should be between 80 to 100 crores.
Okay. And we are expecting this to scale up?
Yes, we are expecting, yeah. See, if you see, there is a huge potential because let's say in every hospital we may have 25 to 30%, maybe 20, 25, 30% of, let's say, coverage. So we can increase this coverage and we can maybe increase it by 30-40% easily with new product addition. And once you have a relationship, it's easier to get into new products, always.
Okay, okay. So we are saying the product bouquet which we are right now present with can be further expanded.
Absolutely, absolutely. Like few hospitals, we have only 3-4 products. So we can increase, we have Polymed has around 150 products in the product range.
Okay, okay.
So we can get more products in the same hospital basically, with the same relationship.
Got it. And dialyzer business, if one were to understand, when we are talking about the national policy on dialysis, then effectively we are also talking about government trying to subsidize this.
So under Ayushman Bharat, there is already a reimbursement under dialysis, which was started last year.
Okay.
Which was close to 1,500 to I think 1,700 rupees, which was not there before. But again, the centers which are doing there is very limited. Well, we still need more centers to register under Ayushman Bharat to do this. A lot of state governments are also providing dialysis under PPP mode.
Okay.
So we are going to the service providers like NephroPlus or DCDC Healthcare or some other Apex Kidney Dialysis Center. These are service providers. So we normally will touch base with service providers to sell our products, and they provide the full service to a patient, including dialysis and everything.
Got it. And how does our pricing change if we were to supply to, a service provider who is supplying to...
Our pricing remains the same. There is no pricing differential because the product is the same.
Okay.
Yeah.
Okay. So the pricing, it doesn't change.
Yeah.
Got it. And from raw material perspective, just trying to reiterate, you're saying it's linked to crude oil, right?
It is linked to crude oil, definitely all plastic, because we use a lot of plastics. So all plastics or their derivatives or chemicals are linked to crude oil.
Right. And if the dialyzer sales goes up, does it pull any kind of pressure on margin?
No, there will be no pressure on margin because it's all uniform, basically, all spread out.
Okay.
And that business is very small. See, renal business is only 75 crores of the total 1100 crore business.
Yeah, I was just trying to imagine if the policy framework were to turn out positive.
I hope there is a positive thing because we still are waiting for the fine print. India government announces policies, but the fine print comes only.
Fine print makes
The minister himself is going to launch the policy on 26th May. That's what you heard.
Got it. And last one on critical care. I think we don't have a material present out here.
Yeah.
Does it require different kind of skill set?
You're right, absolutely. So for critical care business, we need more clinical specialists because these are the people who will go and talk to doctors and nurses directly.
Okay.
And to get the products approved. So that's the reason we are building this whole critical care team. And that's the reason we have launched a new division because anyways we are in the hospitals. So, but the ICUs work differently than the wards or the OT theaters. So that's what we want to do and go more directly and connect with the doctors and nurses.
Got it.
Yeah.
And so one final question. Are you disclosing the 2 products approval that you received in US?
Not yet.
Okay.
Yeah.
Okay.
Yeah, but we have received the 2 approvals which are pending.
Okay. Got it.
Yeah.
Thank you.
Thank you. The next question is from the line of Pankit Shah from Dinero Wealth. Please go ahead.
Hi, sir. Good afternoon.
Yeah, good afternoon.
Yeah. So on the US business, the opportunity what you had mentioned earlier of $15 to $20 million over
Correct.
2-3 years.
Yeah, before
it has changed or something.
No, so nothing has changed. We were just waiting for the FDA approvals, and once now they have come already. Right. So which is a big milestone for the company. And I think this will, now we go with more stronger, let's say portfolio. And once, you get few products in, then it's very easy to get more products inside. Because now we know the route, how it has to be done, the clinical data, the technical specs, the biocompatibility studies. So all that we have already gone through that grind.
Right.
So once the customer approves few products, then they will also start looking at other products. And then now the chain has started. So in let's say maybe next 2-3 years, we'll have maybe 5 or 10 more products.
Right.
Yeah.
So this is basically approval for 2 specific products.
Yeah, product categories. These are 2 product categories.
Right. And we'll be applying for more product categories.
I hope so, sir.
Right. And you just mentioned about the cheap Chinese imports which are happening.
India is 70-80% import dependent anyways. You must be reading all the data.
Right, of course. Yeah. So specifically, if like look at the dialysis segment, so how competitive are we? What could be the price difference?
The price difference between us and Chinese would be around 15% or so. But the problem what is happening is it's a very low duty product in India, number one. The duty is only 7.5%. And the second problem is most of the Chinese are misusing the FTAs. So they are, taking the product to Malaysia or Thailand, relabeling, and sending to India at zero duty.
Okay.
So that is what is hurting the Indian industry today. I think in every sector this is happening. Because our ASEAN FTAs were signed long ago, and it's all duty-free import. It doesn't give India access to market to those countries, but it gives access to those countries into Indian market.
All right.
Which is a kind of structural issue problem.
Right. But then we are dependent on the government only now till the time.
Polymed is not dependent on any government policy. For example, we didn't get some, that's on the PLI front, we didn't get an incentive last year. But it doesn't matter. It has not impacted our PNL. It not impacted our guidance.
Right. No, agreed. I'm talking specific to this example dialysis segment where they will be more competitive only if this government new regulations kick in.
It depends. I think time will tell. I think because now foreign currency is also an issue. Let's say the dollar continues to increase against the rupee. Let's say in coming let's say few months or years. So then definitely import will get more and more expensive.
Right.
So it's a waiting story. So it's a business, it's a new business. We have started it, but we'll see how it goes. We are pushing 100% from our side, but once you have headwinds, you have headwinds. You can't do much.
Yeah. So coming to margins, when the times was difficult, the raw material pricing pressure was there.
Yeah.
We tried and passed on majority of the increase, right?
Yeah.
So right now, how does it work? Do we have to now pass on the benefits of lower raw material cost?
No, I don't think so. So we, most of the contracts we did not, in fact, increase the pricing. Mostly, economies of scale were achieved through internal process improvements, and we refrained from. So we increased prices around 25-30% customers.
Okay.
And the rest of the customers still had the same pricing. So basically, we don't see any crawlback or plowback.
So you're saying there's no demand from customers also to probably reduce the price?
No, because we have products which are already established, already in the system. It's not every day we are not getting a new business or new orders. It's all through a very fixed arrangement, and we have very long-term arrangement with our customers.
Right, got it. Okay, and so the last point is that we've been seeing a lot of push from the government, right, for lowering the imports and also focusing on the exports and all.
Correct.
So how is it now impacting our thought process? Because this aggression has been coming in since last 1.5 years or so.
So our aggression is also very clear, boss. We are trying our best to create that infrastructure. So what we have done is what we created in last 25 years of our operation. We are creating the same infrastructure in next 2.5 years. So 1 year has already gone by, and within this year, 4 new manufacturing facilities, which almost double our capacity. And in 3 years, we'll have double capacity. When they start running full steam, it will double our capacity.
Right.
So that is what we are already emphasizing that what can happen in next 3 to 5 years. And based on that, we have planned that investment.
And also we'll need to buckle up our investments into R&D for newer products.
No, we are already, that process is simultaneous, So in creating infrastructure, developing new, as we said, we are getting into critical care products, and you will hear more, during next few quarters what new products we are going to launch. So that process is continuous.
Yeah, sure. Great, sir. Thank you so much. All the best.
Thank you very much.
Thank you. The next question is from the line of Vishal Manchanda from Systematic. Please go ahead.
Good evening, sir.
Hi, Vishal.
Hi. Sir, with respect to this 200 dialysis machine installation, could you give some color on which are the customers? So are these private dialysis service centers, government, and
no? So we are only catering private centers. We don't cater to government centers. It's all private centers where we cater to, and India has quite a large, let's say India is around close to installation base around 35,000 to 40,000 machines today, and every year we are adding 3,500 to 4,000 machines because some machines get obsolete, the older ones. So these are mostly coming in private PPP mode. If government is also putting it on PPP mode, or if it is coming in private, mostly is coming in chains or private centers. For example, NephroPlus would be buying, DCDC would be buying, or Apex would be buying, or lot of private centers are buying. Lot of trusts are buying dialysis machine. The trusts which provide dialysis service at a very subsidized cost. So it's a standard structure of of sale.
Are these players initially not reluctant to kind of buy?
So that phase is over. We have already installed more than 200 plus machines. 200 plus machines already installed.
Yeah, that's actually a very large number to look at.
Yeah, exactly. So now at least we have machines running from last 2 years in different centers. So there's already installed base and there's already a reference.
And so you look to install another 200 machines this year.
Yeah, exactly. Yeah, that's what our plan is. Yeah, maybe more than 200 machines.
And so the challenge we are facing is on the consumable part of the renal market.
Major challenge is on the consumable part, especially on the dialyzer and bloodline part.
Okay. So is this market dominated by the MNC players and also the Chinese imports, or it is only the MNC players who dominate the dialyzer?
No, not MNCs are losing market share to Chinese players now, big time, last 2-3 years.
Okay.
Because this product was not regulated. So there was a free import, and that was duty free also for a very long time. Only last year in March 22, duty was put in on the product, 7.5%. And there was still no regulation. Regulation was only effective from 1st October 22. But as any Indian company making in India has to qualify for the regulation, get our approvals from CDSC or DCGI's office, whereas all imports were without any regulation. Only now the regulation has come in. So hopefully in next maybe 6 months to a year, a lot of things will clear up with new policy coming in, more push on local manufacturing, local procurement. So things will change a little bit.
Understood.
Yeah.
And so with respect to the CAPEX, the 4 new lines that will be coming up this year, so would this be largely the infrastructure would be ready and the machines you would install?
So infrastructure is almost ready on all the 4 plants, and we are doing, so first plant is already ready in Q1, which is already live now in Jaipur SEZ, and the 3 other plants in Faridabad are going live between Q2 and Q3. We were just waiting for some final finishing and final regulatory approvals. So once they come in, then we will be, because every plant needs a separate regulatory approval.
Okay.
So once these are done, I think then we'll just scale up manufacturing. That's what we want to do. So one is already done.
Right. That's gone live now.
Yeah, exactly. That's gone live in Jaipur SEZ.
Okay. Got it. Thank you very much.
Thanks.
Thank you. The next question is from the line of Sapna Jawar from Kotak Life. Please go ahead.
Yeah. Hi, sir. Hello.
Yeah, I can hear it, but there's some background noise. So, yeah.
Sorry. So before I go on mute, I just quickly ask that probably these 2 approvals, the product categories that we received in the US market, how will the contracting be? Will it be via distributor, or will we directly, are we directly negotiating with the clients there?
No, we don't sell directly anything to hospitals or something. We don't sell anything anywhere directly to hospitals. All supply chain is managed by distributors. So we'll be negotiating with the distributors, and they'll be further placing the product to hospitals.
So this will be the same, the consortium mode.
The same model we have for Europe or India or anywhere else. The same model.
Sure. And are these approvals in line with the contract of $15-20 million?
Yes, we hope so. Yes.
And this is spread over what time period, sir?
No, we are not disclosing any contract. There's nothing about any contract. This is about the business we are going to develop, and the guidance we have given is $15 to $20 million over next 3 to 4 years.
Got it. And you did mention about doubling the capacity over the next 3 years once we get all the facilities up and running at optimum utilization.
Yeah.
So what asset turns are we expecting from these facilities? Will it be similar in line to what we have been doing in the past?
In the tech industry, if you look at in general, asset turn of 1.3 to 1.5 is a good asset turn. I think that is what we are looking at. And we have one of the best asset turns in the industry today.
Yeah, right. And so finally, you did mention about growing very strongly in India. I mean, India also being one of the focus markets apart from the export.
Yeah.
Now, will it not dilute our margins? Because normally Indian markets would give you lower margins. And
I think that's not the case. We don't disclose margins separate for India and export business. But overall, I think when India business grows and with the same team, we are able to perform better. And when we go more in critical care business, the margin will definitely get better only in India. And India business will still stay at, let's say, 1/3 versus 2/3 exports. So if you see last 3, 4, 5 years trajectory, we are maintaining a very similar trajectory. India business goes from 30 to 35% and exports goes from 60 to 65%, plus minus 2-3% here and there.
Finally, one question for Naresh. Naresh, I just wanted to understand the working capital cycle. Over the last 2 years, have we seen, something abnormal in terms of stretching of the working capital, or if you could just, share your vision there.
Sorry, your voice is not clear. Can you please repeat your question?
She's talking about working capital cycle. Do you see any stress in working capital cycle over last couple of years? That's what the question. Am I correct, Sapna? Please correct me.
Yes, sir.
Working capital requirement is, moving in line with the turnover. So there is no additional impact on working capital. We have slightly increased our working capital facilities because we are increasing our revenue. So it is in correlation with the revenue.
And do we have a target, a hard stop that this is the limit that we are comfortable with?
Sorry, your voice is not...
Your target. So do we have any target for working capital? That's what she's asking. Any targets to...
No, we continue at the same level, today level. It will be plus minus 5-10% basis the increase in revenue, but no major shift in the working capital cycle.
Sure. All right. Thank you so much.
Thank you. The last question is from the line of Achal Faray from ICICI Prudential Life Insurance. Please go ahead with the question.
Yeah, hi. Thank you. My first question was on the US market. So if you can, give us some color on what is the structure of the US market currently, as in who are the present dominant players within the consumable space there? Are Chinese players present there as well? And would your clients be GPOs, or are these distributors who will then deal with the GPOs? To understand.
So I'll tell you, answer first. The US market is currently dominated by large GPOs and large medtech companies like BD, B. Brown, then Smiths Medical, who are in our consumable business, basically. Cardinal Health, and then large GPOs like McKesson, Medline, PSS, Henry Schein, they dominate the market. So we are focusing both the streams. We're also targeting distributors and GPOs both. Because distributors have some different reach, GPOs have a different reach, right? And each has a different model. So some GPOs go directly to larger hospitals. Some GPOs only go to smaller hospitals, which are, let's say, day surgery centers. So we'll have to look at different models in the US market. It cannot be one, size fitting all.
So, and what would be the role of Chinese player in the current market? So, are they present at all?
100% sourcing comes from China. That's the role of Chinese players.
So the MNC
any
names
manufacturing which is outsourced out of the US either happens in Mexico or China. So Mexico has a labor shortage. Mexico has a cost issue. China, again, everybody is looking at diversifying from China as a base. And today that's the reason you see a lot of companies trying to bring manufacturing into India. And I think that advantage, once we have created a ready infrastructure, that will give us the advantage to scale up manufacturing in India. So at a faster pace compared to any other player.
So if I understand this, a Baxter in US selling in US would be manufacturing themselves in China and procuring
or Mexico, or they may have a plant anywhere, so we don't know that.
We are not targeting to make Baxter as a client. We are trying to sell on our own.
We will try to sell. We are trying to sell our own manufactured product, our own design product. So we are not getting into contract manufacturing today.
Okay, fair.
So we are going with our own design, own manufactured product. Contract manufacturing means somebody will give you a raw material also. Somebody will give you the costing also. Okay, this is my costing. Give me that costing.
Right.
We don't want to get into this kind of, and Polymer doesn't have any contract manufacturing business today.
Okay.
And that's not our model.
Yeah. And my second question was the policy that we spoke of, the coming 26th May. Would it really have anything to do with the import duties or custom rates? Because shouldn't there be another separate representation to the government for that, and a different committee will set up the anti-dumping duty?
See, the policy is still at 30,000 feet level because we don't know the real fine print. It is only going to be available on 26th May. When the government unveils the whole policy. The announcement, the cabinet has cleared it, as we all heard a week ago. So what we see what we understand so far from the government is there is a push towards Make in India, more stronger push.
Right.
So, and that to do that, they will probably take certain steps and measures.
Okay.
But because at least there is a policy now on the card, and we are now recognized as a separate sector, which was never there before. We were still under, Drugs and Cosmetic Act. We were still under, the Pharma Ministry. All that is still, was very hazy.
Right. And lastly, on margins, if I'm to, look at it on a long-term basis, so margins structurally seem to have, gone up from 20-21%, what you used to do probably 7-8 years back, to now we are doing 27. We are talking, if things remain the same, 25-27 would be the range.
Yeah.
What has changed in this for this margin expansion? So is it
one is the product mix, because as you go more into, let's say, because see, our exports have increased in Europe, so that gives us a better margin at the end of the day. That's number one. Number two, with last year, in last couple of years, the raw material prices were still very high, and the whole disruption in supply chain, so that was also kind of a little subdued. Though in FY21 we had a spike because of a lot of products which were respiratory linked products, and those products have gone now away, because, and also the costing came down because the expenses came down drastically, and that happened for every company. We were not the only one.
So if I'm to ask you, back 10 years back in FY13, what would have been your export versus domestic mix?
The same mix. It was always similar, but the contribution from Europe has increased dramatically. Now 1/3 revenue comes from Europe.
Oh, okay.
Yeah, which was not there 10 years ago. That is exactly the answer to your question.
Right. And if time permits, can you please give us an opportunity size or a market size for the dialysis market in India in terms of consumables per se? So what would be the market size?
The total market is around, consumable market would be around 800 to 900 crores in India.
Dialysis specific.
And then we also sell close to 3,500 to 4,000 machines, and each machine is between 5 to 6 lakh. So there's another 200-250 crore market for machines. So total market size will be 1,000 to 1,100 crores. That's our estimation.
Right. So when we talk about
so we already have a 6 to 7% market share in India today, after starting 3 years ago.
Right.
It's not bad looking at the, but again, we think that with some more support for local manufacturing and with some curtailing in Chinese, because Chinese, they want to destroy the market in every market they enter.
Okay. And a very mature question, I would say, but if machines are being dominated by some other company, dialyzers, how easy or difficult is it to
we are still selling more dialyzers than machines.
Yeah.
So these are universal products. They adapt to any machine.
Okay.
Yeah, they adapt to any machine. It's not necessary that we have to sell the machine to sell the dialyzers.
Sure, sir. Thank you. Thanks for your time.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing remarks.
So I'd like to thank everybody for their time today, and really the questions were very useful to us, and thank you again for guiding us all the time, and look forward to stay in connect. And I'd also invite if some of the people want to visit our plant, they are most welcome to come and see how we manufacture products and how our plants are made as per global standards. So thank you again once again, and look forward to stay in connect.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.